Wake production.
Yo, what is good? I've been meaning to make this video for a little while now, but now that I got like the time and motivation to do it, we're gonna dive right into it. So, first and foremost, markets are different, right? And I noticed that there wasn't very many people like really diving into the markets back in 2020, and that was peak opportunity. So like you would have made money if you were investing in 2020 pretty much if you invested in anything. 2021 was pretty good too. And now we're in 2022. Things are harder, but people are a little bit more interested in markets from my perspective, at least when I talk to like friends and family and things like that. So I want to make this video on how to play it safe, how to manage your risk before you just dive into the markets, right? I'm going to try to make this video not too long here. So first and foremost, right? What type of investor are you, right? If you're not interested in trading and technical analysis, then right here, this is what's going to save your ass. Only dollar cost average into like top 10 tech stocks and ETFs. Now, why I say that is because one, volatility isn't really that crazy. That crazy on ETFs and tech names, depending on which ones you look at. But when you're dollar cost averaging, you're depending on what your income is, you're putting in an X amount, and you're essentially just budgeting your money to also add some money into investments. Right there is like, not many people do that. You'd be surprised. You'd be shocked, honestly. But like, that's probably especially long term, right? If you're a long term investor and you're not trading, that's the best way to mitigate risk, because nothing is going to be too crazy. When you're buying on like a weekly, bi-weekly, or monthly basis, no matter how volatile the markets are, you're going to be buying at pieces of the market where it's high, it's low, it's medium, whatever. You see what I'm trying to say, right? That is the most safe way to invest, yet nobody does it. Like, again, I could pull up a chart and show you, right, over the past 20 years, the S&P, right, over the past 20 years, or 15, or 10, or 5, right, the markets have been going up. This happens because, of course, monetary easing, they just keep printing money, etc. There's so many other factors too. But for what I'm trying to say is that is the most safe way to invest, right? But here's the thing, people don't want to do that because it's boring. And I get it. So you might have seen like people post option trades wins, or like these swing trades that are like 50 to 80 or more percent, right? Like, for example, on DeFi, it was like a over 300% trade. So you might be interested now because either me or others are posting these larger wins than normal, right? Well, why do those happen? Well, these happen because the fundamental understanding of how to manage risk. So what is managing risk, man? You make it sound like so sketchy. So listen, managing risk is as simple as asking yourself this very basic question, right? So you've decided, well, this dollar cost averaging thing, I don't want to do it, blah, blah, blah. It's too slow. It's not my style. I want more opportunity. Well, you have to ask yourself this question, right? How much money am I willing to lose? Straight up. That's the most important question. And I guarantee most people who just jump into stocks, they don't even care. They're just like, screw it, I'm sending it. Which is fair, man. Like, if you want to do that, you could make money doing it that way, but it's not really, smart. So if you want to do this the smart way, and you want to actually have like an edge and like a larger chance of making money, one, learn technical analysis, because that's automatically going to increase your knowledge of markets. But two, when you're asking yourself these questions, right? How long do you want to invest for? Is this like a 2-week trade? Is it like a 5-week trade? Is it 2 days? Right? Is it a couple hours? I'm not really into day trading anymore. I did that when I very first started, and it helps with learning a lot of things. But I quickly realized that, oh, if I swing these for like weeks, I can get way larger moves. So it was a way more appealing to me to do that. But the first thing I learned to do was ask myself, before I put on a trade, how much am I willing to lose? So for example, you have $3,000, right? This is just an example. You have $3,000, but you've decided, I only want to lose $500. Like, that's the max I want to lose on this specific trade. So what you have to do now is decide, am I only putting in $500? Or am I going to give myself room where I could only lose 16% out of that 3,000? Now, 16% of 3,000 is around $500, I believe. So you got to ask yourself those questions, figure out if that's something you're willing to do, and then you got to do the work to find the opportunity, right? So that's why I say, like, you got to know some sort of technical analysis to help you, because if you don't, then how are you going to be privy to finding that opportunity? You're not. You're pretty much just like, you're throwing a dart at a board with your eyes closed, kind of hoping, right? There's so many more strategies to help you find those opportunities, whether it's using options. I don't recommend doing that, but like, if you're just getting started and you want to learn how to invest and trade in the market, you have to decide, first and foremost, am I doing this as a long-term investment? If so, dollar cost average in an ETF or a strong stock, Apple per se, right? If you have decided that, I want to trade, you have to be smarter with what you're doing on a legitimate basis. Like, how much money am I willing to lose on this 2-week swing trade, right? So you could pull up the Galaxy chart, or I just made a video, right, on a bunch of different crypto stocks. This is not financial advice, but in my opinion, the risk to reward opportunities are way greater now than they were maybe a couple months back when things were a little bit higher in price. Now that they've come down, starting to create a base, check out those names. Mark it on like a piece of paper what price they're at now. Pretend that you made a trade, and then check in 2 weeks, right? This is my trade, 2 weeks, swing trade. I'm risking whatever it is, X amount for this much percent. If it goes down to that percentage, I would have lost X amount of money. Or if it continues to rise, what is your plan to exit the trade? I'd exit at this price and I made this much money. Just make a paper trade. Do it on a blank piece of paper, right? Like, and then see, right? Oh my God, like, this is way smarter than me just going, I don't know, all in on a random name. Right? If you, no matter what, right? If you decide before you get into a trade that you only want to lose an X amount, you automatically are making smarter decisions than somebody who's just like, screw it, I'm in. Because then they don't know when to get out, and then they just become bag holders. And then they're like, oh, I'll just wait till it goes up after they lost 70%. But if you always have an idea of, I'm only willing to lose 5-10% here on this trade, and I'm only using $1,000, $2,000, $3,000, things become a lot more to your advantage, especially if you have a keen eye on finding opportunity in the markets. That's the video. I mean, I hope it helps. You know what I mean? Like, there's a lot of other things that could help. So if you have questions, hit me up. I'm on Twitter, Instagram. Comment on the YouTube if you want. Like, I'll be there answering for sure. So, peace, guys.